Hey guys, Marshall Sparkman here with Summit Funding. Look, this video is intended for the players out there in the real estate market. Listen, everybody keeps asking me now that the Feds voted on the 16th to take a hike in the interest rates. The rates were at 1/4%, now they're at 0.5%. Everybody's asking me, how is that affecting the mortgage rates and how is that going to affect the mortgage rates? Well, if you look at the charts, historically, this past week, the rates have not moved. They've actually tapered down a little bit. So the Fed's decision to raise the interest rates has not had an effect on the mortgage industry yet. It may in the near future. We don't know. It may actually cause them to go down. But just remember, the mortgage market, the interest rates are directly tied to the 10-year bond. So when the market reacts, people will stop buying stocks and they'll start buying bonds, and the government will even increase the interest rate on the bonds to entice more people to buy more bonds. That's when we start seeing movements in our mortgage market. So things that will affect the bonds, the 10-year bonds, are things that has an effect on the United States as a whole, the stability of the country. Raising the Fed's interest rates didn't really have a big impact on the country stability in general. It's actually going to increase the stability, which makes the bonds a more secure investment. So in my opinion, the rates should stay low. They're going to have to take a hike eventually. Inflation is a bigger thing we need to take a look at. But I was just looking at a chart. October of 1981, interest rates were at 18.45%. So they did a poll recently, and they polled millennials, and they asked if the interest rates currently were too high, and they all said yes. Unanimous across the board. I'm like, go ask your parents about 1981 when the rates were at 18%. So interest rates are still really good. The markets may or may not react. The banks are going to take a while to react anyway. So all this means the Fed hiked the rates are that banks, it's costing the banks a little bit more money now to borrow money to be able to lend it out in return. So if we do see a jump in interest rates, it may be later on down the road. But the Fed's hiking the rates did not have any effect on the rates, mortgage interest rates, as of yet. So if you guys have any other questions, let us know. We're here for you.